Hey everyone, welcome back to Corporate Decoder. Today we're diving into a financial report that's not exactly a blockbuster movie, but think of it as a behind the scenes look at where a company is putting its money and what it hopes to get back. We're cracking open MSD Investment Corp's latest filing, a Form 8K. It's like peeking at their financial to-do list, so let's see what they're up to. Basically, MSD Investment is telling the SEC about something important that just happened. It's like a company news flash. They priced an offering of notes, which is like taking out a loan, but instead of a bank, they're borrowing from investors. Here's the big news. MSD Investment Corp is planning to get $500 million by selling notes. These notes are basically IOUs that promise to pay back the money with 6.25% interest by the year 2030. It is important to realize that this type of offering is not done publicly, but is offered to a limited number of people. It's like a private sale. The notes have a maturity date. This is the date they promise to pay back the investors. In this case, it's May 31, 2030. The company can pay them back early and might actually want to if their financial situation improves. The deal is expected to be finalized on April 2, 2025 if everything goes as planned. This is important because the company does have the right to not go through with the offering if some terms are not met, although that is rare. So what's the $500 million for? They plan to use it to pay off some of their existing debts, specifically under their revolving credit facility, and maybe invest in some companies they like. Paying debt is crucial. Imagine taking a payday loan to invest. You wouldn't. The company makes it clear that these notes aren't available to everyone. They haven't been registered with the Securities Act, meaning they can't be sold to just anyone in the United States. There are rules in place to protect average investors from getting involved in risky deals they don't understand. Now there's a section called forward-looking statements. This is where the company basically says, hey, we're making predictions about the future, but things could change. They're covering themselves in case their plans don't work out. They include this due to legal requirements. Finally, the report is signed by Brian Williams, the Chief Financial Officer and Treasurer. This is how the report is officially sent to the SEC for all records. Now let's zoom out and look at the bigger picture. The main reason for this SEC form is so that people who own the company's stock or might want to invest will be in the know. In theory, people are going to pay a third party, such as myself, to go over these reports and decode them, pun intended. In the end, the goal is so that people do not invest blindly. So what's my take on all of this? Well, MSD Investment seems to be playing it relatively safe. They're using the new money to pay off old debts. Is it good or bad? It could be a sign that they believe the interest rate on those notes will be lower, making it a smart move. Paying off debts improves their financial health. However, there are potential downsides. Taking on $500 million in debt is risky, even if it's at a reasonable interest rate. If the investments don't pay off, they could be in trouble. A risk is that interest rates rise unexpectedly, making it harder to make their payments on time. Overall, MSD Investment Corp appears to be making strategic moves to manage its debt and invest in future growth. But as with any investment, there are risks involved. The future is still unwritten. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe for more insights into the world of corporate finance.